Yo, what is going on YouTube? I am Germ here. Today I want to try something a little bit different. I want to take a look at a couple different stocks, kind of quick hit style in this video today. These are some of the most kind of search stocks right now in the market. These stocks are all big movers today, the ones that have big interesting stories behind them. So it'll kind of be a snapshot of the market. If this video goes well, this is definitely something we can do more often. Rather than going super in-depth, 8 to 10 minute video on just a single stock that maybe some people care about, maybe don't, I'll try to give you a broader picture of the market with some of the more popular stocks of the day and maybe why they're popping, why they're popular, whatever's going on. So with that being said, let's get right into this. Definitely drop a like if you guys do enjoy it. The support is super amazing, especially when we try out new ideas and stuff, so I know what you guys like and what you don't. And subscribe to stay up to date on my latest content. As always, no financial advice is going to be given in this video. I'm not telling you guys to buy, sell, do anything like that. Just giving you some of my thoughts and opinions, covering the stories, covering the news. With that being said, let's get right into this. First up, we have Grab Holdings. This is ticker symbol GRAB. This is obviously the Asian ride sharing, Uber type, but they also do the food stuff too, kind of like a DoorDash, Uber Eats type deal, all put together. So, like an Uber with Uber Eats, all that stuff. This stock did not do great today, down 37.28%. Hey, after hours, we're up 0.91%, though. We're bouncing back a little bit, but definitely not great. Opened in the red and just kind of tanked as the day went on. This was not amazing. Year to date, this stock was already down. Coming into today, we were down 25-ish%, and then absolutely just fell off a cliff. I believe we are now hitting new 52-week lows. Maybe we hit new 52-week. Yeah, I think we're definitely hitting new 52-week lows today. And man, the 52-week high of this one, 17.15. Falling so far from there is so crazy. But what's going on with this one? This is from the Motley Fool. Why Grab Holdings stock plunged today? A disappointing fourth quarter report sent the stock spiraling. Shares of Grab were tumbling today after the Southeast Asian ride-sharing and food delivery company posted disappointing results in its fourth quarter earnings. And this earnings season has been so crazy. It's been so volatile. You're seeing 20, 30, 40% moves, even in big tech, even in, some of the crazy big stocks. Netflix tanked, PayPal tanked, Facebook tanked. We're seeing stuff soar. It's just so volatile. You have to be so careful, especially around earnings, which is always volatile. But, gross merchandise volume or total spend on services on the platform increased 26% with 52% growth in delivery, but an 11% decline in mobility, which appears to be due to the pandemic. Despite the increase in use, revenue actually fell 44% to $122 million as Grab added incentives to increase its supply of drivers. Costs are going up. This was rough. Grab got hit very hard. Obviously, investors did not love to hear a lot of this stuff. We also have Tnxp, Tonix Pharmaceuticals Holding Corp. We had to start out with some bad news. Now we're getting into the good. This is up 33%. This is obviously a pretty small company. Grab, $12 billion company. Tnxp, $126 million company. This is much more volatile, crazy stock here. Obviously, kind of like a biotech stock or whatever. These are always super volatile. But today up 33%. This was super good. But again, we're sitting at 25 cents. 52-week high is $1.59. You zoom out a year, this thing has just been beaten down. That is kind of rough. Year to date, still in the red despite a 33% update today. That is never great to see. But what is going on here? This is from Investor Places that Tnxp stock is surging on an orphan drug designation. Tonix announced that its TNX 2900 drug aimed at Prader-Willi syndrome has been granted an orphan drug designation by the FDA. This designation, according to Investor Place, is going to open up a number of incentives for the company, including exemptions from user fees, tax credits, and the possibility of 7 years of market exclusivity. That is crazy. That is big. Obviously, not only... Obviously, it's always weird for me talking about pharmaceutical companies and biotechs and stuff because you have the one half of hey, if this drug is actually good, if this drug's actually going to get out to people, this drug's actually going to change lives, that's amazing. You could save people's lives, change people's lives, you could have such a big impact. But then, obviously, we're talking about stocks, so the piece is always going to be, how much money can you make? How profitable is it going to be? How much growth are you going to see? That type of stuff. So this could be big in a lot of different ways. Typically, the FDA gives these approvals to drugs that handle rare conditions and look promising, with a figurative stamp from the FDA to submit documents potentially receive approval more quickly. And with the potential exclusivity, there's a lot to be gained should TNX 2900 be officially approved. So obviously, this catalyst has given us this little bump where we're up 44% on the week. This is great. Things are starting to turn around, but still going to have to get that FDA approval, still going to have to actually be able to get it out to people, sell it, profit off it, make money. There's still a little bit of ways to go, and that's why, hey, on the year, despite this great news or seemingly great news, still down 73% on the year. It's going to take a lot more good news. It's going to take a lot more, not only news, promise, potential, but also results to get this thing back. But kind of a cool story out in the news. Then we have Best Buy Co. Incorporated, BBY stock, up 9.2% today and another 0.05% after hours. $26 billion company here. Obviously, everyone knows Best Buy. Maybe, I don't know, the area I used to live, Best Buy wasn't doing so well. Some places are closing stores, some places are opening up new stores. It kind of depends, the area you're at and everything, but hey, this one is up 10% today. And what's crazy about this is it's actually, it's far off its 52-week highs, but it's not as far off its 52-week highs as some of the other companies we talked about. 52-week high of like 142, 52-week low of 85. So it's decently up from its 52-week low. Year to date, this company's in the green, actually. Best Buy up 7.85. That makes it like one of the better performing stocks in the whole stock market in 2022 so far. All the major indices are down. So Best Buy actually outperforming, the indices in 2022. That's kind of impressive to see. And what's going on here, which is actually, weird, funnily enough, Best Buy shares pop as investors bet pandemic gains will outlast fourth quarter supply chain and staffing hiccups. So Best Buy on Thursday reported fiscal fourth quarter sales that fell short of expectations. Again, think of all the companies that have reported good fourth quarter earnings, but maybe bad kind of growth or bad forward guidance, all this stuff, and they plummeted 20, 30, 40% down. Now Best Buy's actually not coming off a great fourth quarter, and they're up 10%. They're green on the year. This market's so frustrating. This market makes no sense. But anyway, they feel like they were hamstrung by supply chain challenges and Omicron-related staffing shortages. Hey, who isn't? Everyone is. Shares rose, however, as executives and investors bet the retailer will benefit in the long term from consumers' adoption of telemedicine, video conferencing, and more during the COVID pandemic. Obviously, they sell, technology and products like that will help people do that stuff. And their CEO came out and said, we do not for 1 minute believe we hit our peak revenue and margin this past year. And that is very, very good. As a shareholder, as an investor, you always want to see your CEO coming out and going to battle for you. So that was cool. But yeah, kind of weird mixed signals being sent by Best Buy right now. We also have Kroger Co., ticker symbol KR, another maybe kind of more boring stock or not as interesting stock or whatever. This one's getting to 52-week highs now. Year to date, this thing's up almost 22% on the year. Again, what are the good stocks so far in 2022? Best Buy and Kroger. Who would have guessed that? But yes, this stock is doing very, very good. Over last year, up 61.63%. This thing has been a beast. Zoom out even further. I mean, hey, just up and up and up for Kroger. I mean, this is crazy to see. What's going on with them is the grocery chain saw its shares jump 11.6% after it beat Wall Street expectations for earnings. Company reported fourth quarter adjusted earnings of 91 cents per share on revenue of $33 billion. Analysts were looking for 74 cents of profit per share and revenue of $32.86 billion. And yeah, they smashed both of those numbers. And that's how, apparently you get upwards of 11.5% gains in a single day. I don't know. But hey, that's kind of what's going on in the market right now, all across a bunch of different stocks, bunch of different sectors, bunch of different news. Pretty much it for this video today, guys. Definitely drop a like if you did enjoy it. I would appreciate that so much. Leave a comment down below. Let me know what you think about any of these stocks or this video style. I'd love to hear your guys' thoughts and opinions. Subscribe, save today, and all my latest content. Hopefully catch you guys in the next one. But until then, peace.